Alright, what's going on, guys? Jeff here, back again with another video. So today we're gonna be talking a little bit more about this entire military action, if you want to call it that, or some might want to call it the invasion or the war, whatever it may be. But let's talk a little bit about that, but in terms of the stock market. So I'm pretty sure that a lot of people probably already heard of the term, the term where people say, you buy at the sound of guns and cannons, and you sell at the sound of trumpets. Basically, telling you to actually buy when the panic is at the highest, where people are not as greedy. That's when you actually get good prices. And then, of course, you sell when the trumpets are playing, where people win the war, where people are way too greedy. People think that everything is going to go up and up and up. I'm going to be talking a little bit more about what actually happened on Thursday, where we had the whole entire situation of Russia doing a full-fledged invasion into Ukraine. And because of the whole full-fledged invasion into Ukraine, of course, you saw the MOEX, which is the Moscow Exchange, went down all the way by about 45% at one point. You saw their ETFs, all their indexes of Russia going all the way down to 50% at some point. Of course, with the US economy as well, we did see some form of going down, of course. So we saw the Dow Jones going down by 800 points, the S&P and the Nasdaq going down significantly with about 3% as well. However, in the intraday, where we actually saw a lot of recovery happening, because we saw that even though the invasion was happening, we saw Kiev being bombed by Russians unit. We saw a lot of explosion, a lot of buildings getting destroyed by the Russian military units. But the US economy started to recover. So the situation is, and a lot of people probably is very, very curious about it, which is, why is the market going up, even though we know about this ongoing invasion in Ukraine? So this is very, very simple, because the stocks market is it's a very simple thing. The stocks market do not like uncertainty. When the stocks market do not know what's going to happen, it is going to fall, which is why the stocks market usually fall before a Fed's meeting. It usually falls before your CPI data. It falls before Biden comes out to talk about something important. All of these big so-called events that I usually would like to cover are these events that actually will have some form of price movement to the stocks market. And with this level of uncertainty behind this events that's usually about to happen, the stocks market usually have some form of retraction, because the stocks market is generally worried. For example, if I am someone who have millions and billions of dollars in my fund, I'm not gonna be holding out my fund out there in the events where Biden suddenly rug pull the names that I hold, or if Jerome Powell want to rug pull the entire market. So at times like this, a lot of time for the investors who are in the stocks market, we usually sell them all. And when selling happens, selling pressure creates more selling pressure. And because of that, the price will eventually go down before the news actually comes out. Of course, if the news that actually comes out happens to be a very good news, the news happens to be something that is very good for the stocks market, of course, people start to buy back in. And which is why a lot of people think that, I'm much more willing to lose the possible 3% upfront than I am to hold on to it and then have the possibility of me losing 10 to 20% if the news were to negatively affect me. So what actually happened was that when Russia actually invaded Ukraine, this whole entire uncertainty in the investors' mind kind of just broke, because all the investors basically solidified the idea that Russia invaded Ukraine. Okay, this is not a maybe. This is a solid, concrete proof that we have. Okay, you can see on a Wall Street Journal, you can see it on your Bloomberg, you can see it on CNBC. Turn on any news channel and they are going to be covering it almost every single time. So this confirmation of this invasion basically just allowed these investors to be like, okay, you know what? Okay, so Ukraine just got invaded. Okay, but if I am now an investor in whatever market it is, my goal is now to think, what would this invasion do to my stocks portfolio, or what would this invasion affect how I invest in my stocks portfolio? So when this actually happened, a lot of people would kind of think, like, for example, okay, if you're into Tesla, you just kind of start to think Tesla won't have any issues with the whole Russia Ukraine situation. So if that's the case, Tesla is also down by like 8%. I should just buy Tesla because it is now a cheap day for me to buy Tesla. And at the same time, this does not affect my decision into buying the Tesla. So now this become a buying opportunity for people to get back in. And when people kind of get back in during the invasion, you kind of see this very weird V-shaped recovery, like all the news reporter like to call it, the V-shaped recovery in a lot of stocks, because basically people keep on sell. And then the moment they think to themselves, all right, this is going to be happening. Okay, this invasion is happening, and this invasion is already killing people out there, and this war is going to happen, and it is happening. So what am I going to do? I'm just going to buy back in, because the stocks that I want to get into will not get affected. If I want to buy into Apple, does it affect it? If I want to buy my Snapchat, does it affect it? If I want to buy my Palantir, does it affect it? It doesn't. And because of that, people start to buy back in. And of course, when people start to buy back in, especially with the top 500 companies, you can start to see your S&P, you can start to see your Dow Jones, you can start to see your NASDAQ in a whole start to recover as well, which is why we saw NASDAQ ending the day up 3% when we actually saw NASDAQ down 3% before the market even opened. And that's kind of how the market is basically. People start to just shrug off the fear of this sort of thing happening, and they say, okay, you know what? It's all right. We're not that fearful anymore. Shrug off. And that's how they kind of shrug off all the uncertainty. And that's why the market basically have a V-shaped recovery going back up. So the issue now is, or the concern now is, actually comes down to what would actually happen if this current invasion actually start to create this sort of domino effect, where they actually bring in a lot of countries into this entire situation, like what we saw in World War II and World War I. Of course, I am stating this in a very, very scenario-based kind of thing. I'm not a war specialist. This is not war advice. But if we actually see different countries coming into this, for example, if China want to come into this and US want to come into this, because US is already putting troops at the at the Poland border at the moment, and I'm pretty sure China is already preparing to invade into Taiwan. But of course, I'm not very, very sure about that, because I think I read something along that line, and that's gonna be creating a lot of concern, because a lot of these countries, all these powerful countries, all these countries with strong military powers are out here kind of lining up their military units, preparing for battle. And this small fight between Russia and Ukraine, basically stemming from this whole entire NATO situation, could actually slowly unfold to become a huge World War III. And that's where the concern actually continues. So the reason why I keep on telling you guys that I'm not ready to buy back into the market yet, okay, even though right now I'm not that super strongly heavy on my cash position either, but at the same time, I wouldn't want to really be buying back into the stocks market anyway, so it doesn't really affect me that much either. Okay, because the thing is that right now I think I am about 20% in cash, but usually I like to be about like 5% in cash. Okay, so the level over 15% in cash, I'm not ready to buy back into the market, because right now what's going to happen is, because this market is so uncertain, we are not sure if a World War III is going to happen. Okay, we're not sure if there's going to be more countries coming in. We're not sure if Pakistan want to come in. We're not sure if Kazakhstan or Uzbekistan or all of them. All these are uncertainty to me. And because of all this uncertainty, like the stock market, I would like to be worried. I like to be standing on the fence and just kind of see how they work out. Of course, I actually explained my weekly trades where I actually sold puts. Basically, those puts are the puts that I bought like 2 months ago. When I saw that, we have the inflationary situation, we have the inflation situation, we have the Fed's meeting situation, we have the Russia and Ukraine situation. These were big issues for me, and it kind of just waved the red flag to me. And I thought, you know what, I need to buy puts on this. So I bought a lot of puts, and now basically I'm just trying to offload a little bit of my puts so I get a little bit more cash back. So I have been selling some of the puts. I still have a lot of puts on some of the positions, and because of that, right now I am so confused by the situation, and I'm just so uncertain. I'm not sure what's going to happen, which is why I'm still holding on to those puts, because there is a good chance that if this actually start to branch out to become even more, those puts are going to be even more in the money, and I can earn a lot more from those puts. Of course, this doesn't really put me in a good light for me to really talk about earning money in this so-called war scenario. But of course, like I said before, my thoughts are with the Ukraine people, because civilians are dying, and I think that it is unfair for civilians, or like the women and the children, to be giving up their life for a fight that wasn't even supposed to involve them to begin with. But because of that, there's really nothing I can do for that stand. And because of that, I am just trying my best to see what I can do on the stocks market side of things. And yeah, that's kind of what I'm currently thinking about. Right now, I can just tell you guys very, very honestly, I'm just so worried about the market right now, because it's true that we are seeing a lot of recovery in the market. Of course, right now I'm recording this on a Friday. Okay, right now it is about 12 a.m. A lot of the stocks are basically a little bit down, more down than what we actually saw yesterday. But I think that we probably wouldn't see that big of a recovery today. And of course, let's not forget that we also have a weekend to go past. We have a Saturday and a Sunday to go past, and that's gonna be a huge hurdle for us to get past as well. Because if we do not know what's gonna happen on the weekend of the first invasion notice, anything can happen in these 2 days. These 2 days might seem short to us. For us who are not going through a invasion, it might seem like a short 2 days. But for them, it's 48 hours, and 48 hours is enough time for a lot of new things to transpire. And that's my concern here, because we can easily hear a new country's participation into this invasion, into this military action on Sunday. And then Monday, we'll see some huge price movement again, of course, to the downside, which is what I'm going to be worried of. And of course, at the same time, in this 48 long hours, Ukraine can basically just surrender, and then Russia will just come in and say, okay, since you surrender, we are going to be talking, because that's according to what Xi Jinping actually said, to actually go into negotiation terms with Ukraine. And if Ukraine and Russia basically just said that, we only get into negotiating terms if Ukraine were to surrender. And if Ukraine were to surrender, and that can actually happen in the next 48 hours, if Zelensky thinks that, we do not want to sacrifice any more civilians, he just wants to surrender the entire Ukraine over to Russia, he could do that. Okay, I'm not saying that it is the best idea or the worst idea, but he could do that in the next 48 hours. And that's what's gonna be the uncertainty that I'm being worried about, that I'm currently worried about in the market. But yeah, that's why I think that people are most likely going to be more confused over the recovery that we actually saw. Because when we talk about a war-torn situation, or any form of huge military action happening, We assumed that the stocks prices would go down. We saw it in the Cold War, we saw it in the Afghanistan War, we saw it in World War II. We saw it in so many historical data that prices usually go down during a war. And it's very, very normal because it's kind of common sense to us. Okay, it's very, very normal for us to think that stocks would go down during wartime. But for US economy, one of the most important economy in the world, and as much involved in this current invasion as well, to actually recover on the first day of an invasion seems very, very odd. And because of that, I thought that I probably should do this video to kind of explain to you guys my own opinion on why the stocks market is actually recovering as well. But anyway, that's all I have for this video. Check out the link below for free stocks on Moomoo, which is the trading platform that I'm currently using for my trading account. Also, I have free stocks on Tiger Brokers and also free Bitcoin on your Coinbase and also Gemini. But for Singapore users, try not to use Coinbase. I think it's better for you guys to use Gemini because Coinbase does not really allow you to withdraw your tokens directly to your Singaporean account. So it's better for you to use Gemini if you're actually starting out with a crypto account. But anyway, I thank you guys for watching, and I'll see you guys in the next one. Thank you.